We've been hearing rumors about tax reform for years, but it's finally official. The new laws for 2026 are locked in and they create two different worlds for taxpayers. Whether you're dropping $20 in the collection plate or writing a six-figure check to a foundation, your strategy needs to shift today. All right, let's talk about charitable donations. The tax break you get for them is about to go through the biggest shakeup we've seen in a decade. There's a new law on the books, and that's going to completely change the rules. And it all kicks off in 2026. So let's dive right in to this major shift. And you want to pay attention because for some of you, this is going to unlock brand new ways to save on your taxes. But for others, things are going to get a little more complicated. So the big question is, will you come out ahead? How is this going to affect you and your wallet? We're going to break this down precisely what's changing step by step so you can start thinking about your own giving strategy. Okay, this whole shakeup, it's part of a bigger bill, but what it really does is create a big divide. It basically splits the US taxpayers into two main groups, and it all comes down to how you file your taxes. The first thing you need to do is figure out which camp you're in. Are you one of the 90% of folks who take the standard deduction? If so, I've got some good news. But if you're in the other 10%, the itemizers, you may need a new game plan. The rules are changing for you, but don't worry. There are strategies to help you too. All right, let's kick things off with a really good news. The part that affects most people. We're talking about the new break for the vast majority of givers. For the first time in a long time, we're getting a permanent, universal charity deduction for people who do not itemize. This is a big deal. And just look at this number. For joint filers who take the standard deduction, you can deduct up to $2,000 or $1,000 for single filers. This is huge. It's a brand new deduction that directly lowers your taxable income. What that means is millions and literally millions of Americans will finally get a tax break for their generosity without having to go through the hassle of itemizing. But there are some rules, and let's run through the fine print. First, this kicks off for the 2026 tax year, and it's only for folks taking the standard deduction, and it only applies to cash contributions. That would be checks, credit card payments, for example. The money has to go to a qualified 501c3 charity. And a couple of key things to remember. You can't use this for gifts to donor-advised funds, and you can't carry forward any unused amount. It's a use it or lose it deal each year. All right, so that's the story for the 90%. But what about the other side? For those 10% of you who itemize, there are some new hurdles coming your way. It's like a new puzzle you'll need to solve. And there are two big pieces to it. The first new hurdle is something called the adjusted gross income floor, or AGI floor. The best way to think about this is like the deductible on your car insurance. Just like you have to pay the first $500 of the repair yourself, it's kind of like that. Starting in 2026, you can only deduct the part of your donations that is above 0.5% of your AGI. Your gifts have to clear this hurdle before they start saving you any money on taxes. Let's make this real clear with an example. Say your AGI is $200,000. Well, 0.5% of that is $1,000. So your floor is $1,000. Now, let's say you donate a generous $4,000 to charity. Under the new rules, only the amount above that floor is deductible. So you can only deduct $3,000. Before 2026, you would get to deduct the full $4,000. Now, that first $1,000 gives you zero tax benefit. That's a pretty significant change. And it's not all. There's a second hurdle. This one is aimed at the highest earners. If you're in that top 37% tax bracket, the value of your deduction is going to get a cap. It's going to be limited to 35%. So what does that mean? Well, a donation that used to save you 37 cents on the dollar will now save you only 35 cents. I know 2% might not sound like a lot, but when you're talking about large donations, it can really add up. Let's put this all together with a clear before and after. Look at this example. We have someone with an AGI of $1 million who donates $400,000 to charity. Under the current rules, he'd get a tax benefit of $148,000. But in 2026, first, that 0.5% AGI floor eats up the first $5,000 of their donation. Then the tax benefit is capped at 35%. The result, their tax savings on the exact same donation drops to about $138,000. That's a difference of almost 10 grand. So with these new hurdles, you're probably asking, how do I maximize my tax savings? Well, there's an answer, and it's a really powerful strategy. It's called bunching. The idea behind bunching is actually pretty simple. Instead of spreading your donations out, like giving $2,000 each year, you bunch them together. So you might give $6,000 all in one year. But why would you do this? Because the big bunch donation is much more likely to push your itemized deductions over that standard deduction and clear the new AGI floor. By doing this, you may be able to unlock some big tax savings that you may have missed out on otherwise. But you may be asking, does that mean I have to give one charity a massive check every 3 years and then nothing in between? And the answer is no. This is where the tool called the Donor Advised Fund, or DAF, comes into play. The easiest way to think of this is that it's like your own personal charitable investment account. And here's why a DAF makes bunching so easy and so powerful. It truly gives you the best of both worlds. Step 1, you make one large bunched contribution to your DAF. Step 2, you get to take the full immediate tax deduction for that big amount that year. And then step 3, you can recommend grants from your DAF to your favorite charities on your normal schedule. You can still give them monthly or annually, whatever you want. You get the tax break now, but the charities get the support over time. Now we've covered a lot of ground. Let's pull this all together and do a quick side-by-side comparison of your giving plan in 2025 versus what it's going to look like in 2026. Here's a summary of all the key changes. Think of it as your final cheat sheet. Let's recap. For non-itemizers, the 90%, you're getting a brand new deduction. Awesome. For itemizers, you're getting 2 new rules to think about, that AGI floor and the deduction cap. So the big takeaway here, especially for anyone who itemizes, is that $1 you donate in 2025 is actually more valuable tax-wise than $1 you donate in 2026. So with the actual value of your deduction changing, the biggest question you need to ask yourself isn't just how you'll give, but when. This whole shift really focuses us all to be more strategic. For a lot of people, it even makes sense to accelerate some of your giving into 2025 to lock the better rules that we have now. Now, of course, with any big change like this, everyone's situation is unique. So it's always a really smart move to talk this over with a tax professional to see what the absolute best strategy is for you. Here's the bottom line. The days of autopilot giving are over. If you're in that 10% of itemizers, you are fighting against gravity with a new AGI floor. But remember, the tax code rewards the proactive. If you sit down and map out your donations now, maybe using that bunching strategy or opening a donor advised fund before the ball drops, you can still come out ahead. If you found this video helpful, click like, subscribe, and send me an email at joshkatzcpa.com. Thanks for watching, and see you in the next one.